Good morning, everyone. Today, let's soak this in, take it nice and easy, because this is the final in our series, our nonprofit finance basics series, and we'll be welcoming back Donald Wells for the last time today. We'll be talking about audits, but before we get to that, let's hear a little bit about Donald. He's been practicing in accounting for 30 years. And he's worked at several firms, but currently owns his own firm, Wells CPA LLC. And over the past 30 years, Donald has worked extensively across many industries, but I'm going to say for him that his favorite is the nonprofit sector. He's sat on several boards, and those include Fellowship of Christian Athletes, SocialVentures, Catalyst Columbus, and the National Christian Foundation of Ohio. In his spare time, when he has spare time, he enjoys working with business leaders and coaching youth in the area. He holds a bachelor's degree from West Virginia Wesleyan College and is a certified public accountant in the state of Ohio. Before I turn it over to Donald for the last time today, I want to do our standard housekeeping. This session is being recorded, and what that means for you is that you will have access to this recording after the session is over. It'll be emailed to you using the email address that you use to register in Eventbrite. Please also keep an eye on that email address, because we will send you the slides for this forum, in addition to a survey that we hope that you will fill out to let us know how we're doing, whether you enjoyed this forum and what other forums you'd like to see coming up. If you are in need of closed captioning, please note that Zoom has changed the function of this feature, so please let us know if you have difficulty finding it. Before I turn it over to Donald Wells, I want to make sure everyone understands the closed captioning, so I'll take a moment to review that again. 3 buttons, 3 little dots in the bottom right-hand corner of your screen. If you click those, you'll see a label that says caption. If you click caption, you'll see a drop down. If you click show caption, the caption should appear on your screen. If you need to change the size of the captions, you can visit caption settings. And if you need to change the location of your captions, you can click and drag those around your screen at any time. As I was saying, if you find that you have trouble with this function, Zoom has recently changed it. So please go ahead and leave a message in the chat box. We have an administrator that will help sort that out for you. Speaking of the chat and Q&A, we use the chat box for functions like closed captioning if you have any technical difficulties with this forum. If you have content-related questions, please leave those questions in the Q&A box, and we will address those during the Q&A session. You can upvote any of the questions that are in the Q&A box, and those help us know which one of those questions are burning questions that you really need us to get to before the end of the forum. I apologize for disappearing on you just a few minutes ago, but I wanted to highlight Tori Procup. Since this is our last of this series, she has been integral to making sure that we can keep this pulled together. She's in the background of these, answering all of those questions in the chat box. So thank you so much to Tori for making this a very successful series. And with that, I am thrilled to turn it over to Donald Wells.
Danielle, thank you. And I really wanted to take a moment to thank Victoria also. This has run so smoothly over these, 6-7 months. And it's to the pre-work that she's doing. We tried to get her to come on screen and to take a bow, but that's not her personality. But I really want to say thank you to Victoria and everyone at the Clemens Foundation. The Clemens Foundation has made a tremendous investment in providing this type of information to the not-for-profit industry. And obviously, most of these things would not or could not take place without the Clemens Foundation and their support. I know that Danielle is banging the drum at the Clemens Foundation, saying we need more, we need more, we need more. which is why the surveys are so vital. If you would please do the surveys, take time to complete the surveys, let the Columbus Foundation hear about what you would like to get information on, and then put the onus on them to go and find that information. That's really the way that you, as the nonprofit community, has a tremendous voice in what the Columbus Foundation is doing for you. So I really want to suggest that. And then one last thank you to Danielle and actually my team. We have made tremendous progress over this period. If you were around a couple years ago and you saw me do a presentation, the slideshow never looked like they look today. We've made investments, and the team has really come together to do a lot to try to upgrade this. Danielle, just so that you know, one of the things that we'll be doing in this near future is we'll be working to put polling questions into our presentations. I'm an interactive person. I love doing in-person presentations. This has been a learning experience for me. I appreciate you using the chat box to communicate with me, but we're also going to make the move to polling questions. So let's get started. Let me see, I'm sharing my screen. So now you should have on your screen the presentation for Do I Need an Audit? And we're going to go through that, but I'm going to ask you and see if I can see it real quick. Before we get started too far into this, why do you, if you receive an audit, why do you receive an audit? I am searching for the chat feature so that I can see a couple of the replies that people put in regarding why they receive audits. So if you could, drop a couple comments into the chat box regarding why do you receive audits. And we're either going to support that or disprove that as we go through the presentation. Single audit requirements, yep. Funders ask for them, yep. Those are all really good reasons. Let me see if I can get a couple more replies and then we'll jump in. So I know there's more than 2 people out there, so just a couple more replies and we'll get moving. The board is asked, Jennifer, I think I know you. Yearly audits for updated financial statements, good. Funders ask for them. Single audit requirements, very good, very good. So what we're going to do is we're going to go through, do I need an audit? And then we're going to tell you what you actually get in the audit. Helps keep staff honest. Board is discussing. Stephanie, this is going to be really important for you. So I really hope that you take a recording of this and get it to your board, because that's the situation where the board is discussing it, that I think that we can become very good stewards with some of the assets that we have at our disposal. So thank you guys for that. I think I'll go back to the chat at least one more time throughout the presentation, but I did want to get started with that. Danielle has already provided you with my background, so there's no reason to go through that. So as we talk about, do we need an audit? Let's talk about what is an audit. An audit is a financial audit, which is what we're really talking about here, is an objective examination and evaluation of financial statements of an organization to make sure that they are fair and accurate presentation of the transactions. So there's a lot of language in there, and we're going to piece it out little by little throughout this presentation. But one of the things that I find is that the word audit gets used generically, much like the word Xerox. Xerox is a corporation. that sells digital products. Xerox is not what comes out of a copy machine. That's a copy. So very similar to the idea of, we have made some terms very generic. That audit term has become very generic. And unfortunately, when someone asks me about an audit, that's a very specific term. So we're going to go through the different terms that are sometimes wrapped into the concept of an audit also. I just wanted this slide in here to make us think about, let's not use generic terminology. You know, so many times I've done presentations, and we like to do presentations. I like to do presentations with a question at hand. And we get all the way to the last slide and the presenter finally answers the question. I decided on the front end of this presentation, I want to answer a question. When do I need an audit? And some of you had hit these comments. State or federal government requires it. You have more than $750,000 of federal funding that you received during the year. Funders require it. I mean, at the end of the day, that's what we're really addressing is funders, even at the federal and state audit levels. Financial statements, financial institutions will sometimes require it if you have debt. And then if there are specific contract requirements required an audit. I've had conversations in town with a lot of organizations, and they will ask me, hey, Don, we are now $300,000 in revenue. Should we have an audit? And the answer to that question is your revenue doesn't necessarily drive your need for an audit unless it's federal revenue. So I really want to talk about what the issues are that you're trying to address. So I think, Stephanie, you said your board is talking about an audit. I really would ask them to talk deeply about, okay, what issues are you addressing? Are you planning for a funding requirement in the future? Or are you looking at, well, I just want to get more comfortable about what we do. And I don't want to pick on anybody, but last year, I think it was last year, the Columbus Zoo went through a lot of issues. And we all, especially in Central Ohio, we're really aware of some of those issues that the Columbus Zoo went through. The Columbus Zoo receives an annual audit, and the firm that does the audit is highly respected. I mean, really, really good. I lean on that firm sometimes for their expertise in the not-for-profit space. They are a good firm. And as I was reading the reports that were coming out about the Columbus Foundation, or the Columbus Zoo, I would go through each of these issues and I would say, you know what? That would never come up in an audit. That would never come up in an audit. That would never come up in an audit. So those are the types of things that we're going to try to disprove as we go through this, so that you know what you're really getting when you get an audit. Because even in some situations where you need an audit and these items exist, I think that as organizations and boards, we're leaning on that to mean something that it doesn't mean. So we're going to talk about that, and we're going to go through some of those items. But before we go through those, I want to build to the audit. And again, as your board's discussing this audit, I want to get away from generic terminology. Like, don't call up a firm and ask them, hey, can you do an audit? Because in their head, they're going to a very specific thing. So I want you to know the different terminologies that exist. The first level of service, or the lowest level of service that a external accounting firm, audit firm can provide for you, is a compilation. What a compilation does, it really takes your financial statements. Let me be very clear. It takes your QuickBooks file, it takes your internal records and turns them into a format that's presentable and consistent with other statements that would be going out the door to third parties. So it formats them different. It puts them together in a way that somebody on the outside is looking at them and they understand what you're saying, and it's very consistent with the other things that they're looking at. What it does not provide, there's no opinion or assurance on the information. We literally take your documents and we turn them into a, like I said, a more presentable document. There's no testing and there's no analytical review of anything. So you give me your QuickBooks file, I go into my lab and I put together a bunch of documents for you. And then I come out on the tail end with something that looks consistent with what's used in common practice. I will say that if you're contemplating needing an audit in a couple of years, compilation is not a bad place to start. Compilation is usually pretty economical, and compilation, I can help you as an auditor or as an external person putting together a compilation. I can help you with the policies and procedures that you need in your financial statements. And we're going to talk about financial statements in a moment. In a compilation, there is no requirement that I'm independent. So that means I can actually help you. I have a couple of clients that are moving towards an audit, and what we've been doing, we've done a compilation for a couple of years, then we're going to do a review, and then we'll move into an audit. But that took a great deal of foresight by that organization. I think the compilation is an underused resource for most, especially smaller not-for-profit organizations. The second level of service is what we call a review engagement. A review engagement provides you with a limited level of assurance. What does that mean? A limited level of assurance. I am saying that, you know what, I've looked at these numbers and nothing jumps out at me as being unusual. That is a limited level of assurance. A review is primarily analytical in nature. You see the last bullet point there. What do you do, and do your numbers make sense? If you were around when we talked about the storytelling process, a review is really, I want to talk to you. I want to read your board minutes. I want to look at what your operation is. And then I want to look at the numbers. Are the stories lining up? Are the stories jiving? That's what a review starts to give you. It gives you that level of a third party looking at all of the non-financial data to make sure that the final, or to give a limited assurance that the financial data makes sense. What a review does not do, it does not give you an opinion, and it does not test any detailed accounting records. What do I mean by test detailed accounting records? There'll be no pulling of checks to make sure they're signed by the right person. There'll be no verifying that a balance of a debt is the same balance that the bank has. There'll be no verification process in a review. So we've got a compilation of review. I said the compilation was underutilized. This service is grossly underutilized. This is an agreed upon procedure. What's agreed upon procedure, Donald? So and I've had these conversations with boards where people call me and they say, hey, Don, I need an audit. And then we'll talk about why. And they're like, well, we want to make sure that our cash policies are followed. I said, well, do you need an audit or do you need an agreed upon procedure? Because what agreed upon procedures do it allows you to identify the risk. Hey, I don't require an audit, but there's something very specific that I want to make sure of. And then you turn to the auditor, the external person, and they will design a procedures to go and nail that risk. I'll give you a great example. Let's say that I did it for a booster club. They were changing treasurers. All they had was cash and check writing. They really didn't have anything else on their financial statements, especially on their balance sheet. They called and asked for an audit. The audit was X number of dollars to do. We talked and we were able to do an agreed upon procedure for about 40% of what an audit would have been. And what we did is we looked at 3 years worth of cash disbursement transactions for them to make sure that supporting documentations was there and that they were all signed off by the right person. So at the end of the day, they walked away with a tremendous amount of comfort that, hey, as we switch treasurers, we know that what has been done in the past is okay. And a financial statement audit would not give them that. So I like to really push into and press into agreed upon procedures as you're working towards your ultimate, ultimately what we would love is that we all need audits because we have tremendous funders and we're getting so much money that the funders say, you know what, we kind of really need the audit. So at some point that would obviously be something that we would have to do, but I'm not always sure that's where we start. So an audit. So we have a compilation, we have a review, we have agreed upon procedures, and now we have the audit. So what does an audit do? It's the highest level of assurance that you can get from an external person on a set of financial statements. An actual opinion is issued, and we're going to look at what the opinion says. There's testing, or at least at a minimum, a review of the internal controls that exist within the organization. What it does not provide is that things for a 12-month period have been done consistently with their policies. This is something that is really hard for most people to understand. An audit is of a set of financial statements as of a certain date and time. I use this example a lot, and there's, if you will allow me a little bit of liberty, I'll use this example. So let's say that I'm doing a December 31st audit. And so I'm auditing the cash balance as of December 31st. Let's say that sometime in March, someone took a short-term loan from a deposit. So money came in, it didn't make its way to the bank. It made its way into someone's pocket, in someone's hands. It was misplaced, it was misused, whatever happened. And that happened in March. Let's say in June, that was corrected. That short-term loan was repaid and no one knew. It was misappropriate. We got the money back, so we were able to put the money back into place or in the account. So by December, when I look at that December number, everything's tight. Everything agrees. Now, there are a few instances where I might find that during the course of an audit, but my audit is not necessarily going to go back and look at all the deposits that were made to make sure that the monies were appropriate and things of that nature. So I use that example so that we understand that an audit is really focused on a point in time and not necessarily the historical transactions. Very different than an agreed upon procedure. Agreed upon procedure, you could say to me, hey, Don, I want you to look at all 12 bank reconciliations and make sure there's nothing unusual on them. Okay, in that case, that short-term loan probably could be identified in an audit, because I'm probably not going to go back and look at the March reconciliation for any purpose because I'm focused on the December. Just a little bit of a difference. Hopefully that's not confusing, but hopefully it gives you an idea of what an audit will do for you. In the not-for-profit space, there are 3 types of audit, and unfortunately I have these out of order. The first type of audit is a financial statement audit. And I keep using this term financial statement, and we have a definition for it later that we need to get to. The second type of audit is called a yellow book audit or governmental audit. You will find most of these audits take place because funders require the audit to be performed under or using governmental auditing standards. Governmental auditing standards raise up the expectation. Generally speaking, again, general terms, a governmental audit will determine whether or not you complied with any big issues in the funding source and laws and regulations. Like one of the key things that we will look at when we do a single audit, a yellow book audit. When we look at a yellow book audit, we will go and we'll look at personnel files. Are the I-9s in place? Do we have salaries and compensations documented in a personnel file? Because what we found is that is the greatest area of risk for most nonprofit organizations. We don't usually have human resources in place, so we're haphazard a little bit in those personnel files. So as we look at the laws and regulations of the land, payroll is one of the areas that we've deemed to be a risk area. And then we'll go through the grant document and see what they're asking you for from a compliance standpoint. And each of these build on each other. So when we get to the single audit, that's the federal audit or the uniform guidance audit. That is a financial statement audit and a governmental auditing standards audit, as well as a test of compliance with your significant funding from the federal government. Health and Human Services will issue you a funding, and they'll say, you know what, we want to make sure that cash management rules were followed that we set up. So we have to go and look at the cash management laws and the rules that Health and Human Service has, which might be different than HUD, which might be different than the Department of Treasury. So as you get into those uniform guidance or single audits, it becomes really important that we start to identify exactly what type of funding we have, so we know what the requirements are. 3 types of audit: financial statement audit, yellow book audit, and a single audit or a uniform guidance audit. So again, terminology of audit is I'm really pushing us as a community of nonprofit organizations not to use that term quite as generically as we go forward. So I'm going to stop sharing for just a second because I am going to drop something in the chat box if I can get it to work. All right. So I've just shared a link with you to an engagement letter. The key elements of an audit engagement are defined in truly a legal contract. In our terminology, it is an engagement letter. We're going to go through, and you have a link to one. If you have an audit, you have one. It is a long document, and no one likes to read it. So what I'm going to do is I'm going to pull out a couple of key elements of it to, again, level set us on what we're getting when an audit takes place. First and foremost, the engagement letter is addressed to the individual or individuals charged with governance and management. So it's truly a contract between the board and myself. So many times we put management in that role, and management is signing the engagement letter, and management is doing this. It truly should be individuals at the board level. So we need the board on board, and we need the board to understand these things. All right, long sentence, but and the highlights didn't show up great, so I'm going to show you where I have highlights in here. The objectives of the audit are to obtain reasonable assurance that the financial statements as a whole are free from a material misstatement. So that's the first thing that I really want us to understand. My goal is to make sure the financial statements are not materially misstated. Does anybody have an idea of what materially misstated might mean? I'm going to see if anyone has an idea in the chat. Materially misstated. This is where I wish we were in person, because I could pause and know that people were pondering the question. All right. Materially misstated. Well, I'm going up. Misleading the reader. Amounts are big enough to mislead somebody. Major misstatement. Good. So, Jermaine, I love the fact you went straight to the textbook answer. I love that. Incorrect information. So here's the material misstatement story. I use this story a lot. When I first started working in the accounting field, I was working with Price Waterhouse, and I was working at Marathon Oil Company up in Findlay, Ohio. It was my first month or so out in the field doing work. I was testing the accounting for an oil well in Russia. I found $1 million error in the financial statements in the manner that oil rig was being accounted for. I thought I was over the moon. I thought I was about to get promoted. I thought that I was awesome. I was working in Pittsburgh, relative East Coast city. My supervisor set me up, told me to go talk to the partner about it. I went to the partner, told him I found $1 million error, and he cussed me out. He cussed me out for bothering him for such a small matter. $1 million in Marathon Oil Company's financial statements is a rounding matter. So materiality in and of itself is not a dollar amount. It is the amount that a reasonable person would need to have impact their decision on the organization. What does that mean? Let's say that you are a not-for-profit, and let's say that you have a your financial statements in total, you have cash and other things of $30 million. If Danielle at the Clemens Foundation is making a decision on funding, is a $10,000 error going to change her opinion? If the answer is no, then it's not material. Will $1 million change or error change her opinion? If the answer is no, then $1 million is not material. So the materiality really comes down to the user of the financial statement. I issue hundreds of audit reports a year. Audit reports are issued all over the world, and I very rarely, I think probably in 30 years, I've had 5 people ask me, "Hey Don, what was the materiality threshold that you used in this engagement?" Because what happens is that the board and the organization is thinking that, okay, materiality is 10,000, so we're good with anything around the 10,000 threshold. Maybe the auditor is working at a materiality of 100,000. So I think that's where that difference starts to come into play. Reasonable assurance is a high level of assurance, but not an absolute assurance. Therefore, it's not a guarantee that an audit conducted in accordance with generally accepted auditing standards will always detect a material misstatement when it exists. What does that mean? I can't promise you I caught everything. And the reason I can't promise you I caught everything is because I'm only giving you reasonable assurance, not absolute. Why am I not giving you absolute? Well, because I'm not looking at every transaction. So if I'm looking at every transaction, we might be able to do absolute. Nobody wants to pay us to look at every transaction. And this is in the auditor's responsibility to the financial statements and the engagement letter. We will plan and perform the audit to obtain reasonable assurance about whether the financial statements are free of material misstatement. So again, we're functioning in that materiality threshold. We're talking about materiality. Unavoidable risk that some material misstatements may not be detected by us. Again, we're telling you, we can't be sure that everything is correct in this. We will obtain an understanding of the organization and its environment, including internal controls related to the sufficient to identify and assess risk of material misstatement. So do we have to test your internal controls? Do we have to test the processes? Not necessarily. If it's not a process or something that we think will lead to a material misstatement, that's not being tested. Now, why am I telling you this? I'm telling you this so that as you think through, hey, we want an audit, what I want you to know is what you're not getting. Because I think too many people are asking for audits and they're thinking they're getting something that they're not. So the engagement letter will also go through management's responsibility of the financial statements. Management you acknowledge and understand your responsibility for designing, implementing, and maintain relevant to the presentation and of the financial statements that are free of material misstatement. You are responsible for your processes. You can't put that off on anyone else. You have the responsibility for making sure that your financial statements are free of material misstatement. As an auditor, if you have an audit, what auditors struggle with is if I come in and I have to make an adjustment to your financial statements to get them right, then now I have to say, okay, what was wrong with their processes? Because as an auditor, you're supposed to give me a set of financial statements that are accurate. So every time I have to make an adjustment, that means something went wrong in your process. And those are the types of things that get reported out. This is one that people pass over. You're responsible for making drafts of financial statements available to us. When we're dealing with the government, the yellow book, and the single audit, there's the independence matter that comes into play. Most organizations give the auditor a QuickBooks file or access to a trial balance out of their software and say, here's the financial statement. Those are not financial statements. What the auditor then does is they take that data and they create the financial statement. Well, in the yellow book and the uniform guidance or the single audit, that is something that's called an independence breach. So now we have to do things to repair that breach. Today, under the financial statement audits, that's not a requirement. Some firms will say, no, we want you to give the financial statements and not the trial balance. I am anticipating that in the next 3 to 4 years, in the financial statement arena, this will become an independence breach. why is this all important, Donna? Why are you making this point? I'm making this point because as you start thinking and as you're working towards, okay, we're going to go into this audit world, do you know what you need to be able to prepare for the auditor? Like, so many people just want to say, hey, I've given you access to QuickBooks, have at it. And today that works for some engagements. I'm not sure that's going to work for all engagements in the near future. This is something that I love to tell people. Management responsibility. You're responsible for design and for informing us about all known or suspected fraud. You're supposed to tell us about fraud. We're not supposed to tell you. Right? Now, if we find it, we have an obligation to communicate it to you, right? But that fraud conversation truly is supposed to come from you to us. Why? Well, because if you've had fraud, then that changes my risk and makes me do things a little bit differently than what I would have. I think that so many people say, okay, well, the audit is going to find fraud. I've even had one poor presentations, people ask me, hey, Don, what did you do to find fraud? And the answer is, I didn't do anything to find fraud. That's not my responsibility. Now, if I found it, I would tell you about it, but I didn't do anything specifically to find fraud. All right, so we've gone through the engagement letter. We're going to now go through the document that so many people love and want, and that is the opinion from the auditor. Tell me how we did. What does the opinion say? The opinion says, in our opinion, the financial statements referred above present fairly in all material respects the financial position as of a date and time and for a year according to generally accepted accounting principles. That's the opinion, and that is the best opinion you can get. But so many people read that opinion, and even I, when I give a presentation, hey, you got an unmodified opinion, you got the highest level of opinion, which is great. But again, when you're looking for X and you're getting Y, I just don't know that we're communicating well with each other. It also says in the opinion, management is responsible for the preparation of the financial statement. So many people will ask me, hey, Don, there's this sentence in the financial statement. I don't like it. Can you change it? Well, they're your financial statements. You change it, right? I mean, they're not my financial statements. They're your financial statements. So I think that we need to more and more understand that the actual documents belong to management. Again, materiality. So I've used the term financial, and I probably should have put this slide way at the front, so I apologize about that. Financial statements, what are they? In the not-for-profit world, this is what makes up the entire set of financial statements. A statement of position, statement of activities, statement of cash flow, statement of functional expenses, and this is the heaviest lift, the notes to the financial statement. So statement of financial position. So if you're in QuickBooks, you can run that, right? You can run that out of QuickBooks. That's great. Statement of activities. You can run that out of QuickBooks. Statement of cash flow. You know what? QuickBooks has a cash flow statement, but it's not a GAAP-based cash flow statement. So you can't run that out of QuickBooks. Statement of functional expenses. If you're using classes or tags within your accounting system, or if you're using funds or anything like that where you're separating your expenses, you can get that out of QuickBooks. Notes to the financial statement. Notes to the financial statements. I believe that I have a slide that defines that. Yep. Notes to the financial statement. They provide additional information pertaining to a company's operation, financial position are considered, and notes are required for full disclosure. What are notes? Notes are your policies and procedures. Notes take your financial statements and give the reader additional information. Those are the notes to the financial statements. Now, especially at the smaller size organizations, 95% of the notes are at least drafted by the external auditor. They're given to management to review, and that review becomes the taking of responsibility for them. That's kind of the way this process has worked, and I don't know that that's always been explained to people. If I'm back at Price Waterhouse and I'm working at on Marathon Oil Company, I deliver to management, I deliver to the board a one-page document as a result of my audit. I delivered them the opinion. That's all I deliver. They have everything else. They put everything else together. They bind it. They distribute it. They do all of that. It was always cool when you're first year staff and the partner would sign the opinion and hand it to you to drive to the client. You became the most important person at the client that day because you were walking in with the one document that they were all waiting for. But everything else belongs to management. So if you currently have an audit and you open it up, the only thing that belongs to that audit firm is what's on letterhead, on their letterhead. Everything else is yours. Everything else is you had told them you take responsibility for. Everything else is supposed to be your responsibility and you're accountable for it. So that's the little rub that we have in the audit audit cost. They're getting out of control. They're truly getting out of control. And I want to give you guys just a couple numbers to think about. So a basic entry level audit today, if you can get below $8,000 on it, you're fortunate. You are fortunate. It's just really hard, and most of that cost is built into planning and us meeting our requirements, our professional requirements. It doesn't add a whole lot to the audit. So I just want to give you that framework. And if you're going to somebody and asking them for a $5,000 grant, and they're like, okay, cool, we need an audit. You need to do the cost benefit analysis on that grant to determine whether or not it's worthwhile. But in today's marketplace, somewhere around that $8,000, you're fortunate. Most people are going to be closer to a $12,000 to $15,000 number to do the audit. So 8 is on the low end. Real quick, auditors work on a materiality concept. That's really important that we understand. Controls, processes, and fraud are all management responsibility. And if you walk away from this presentation and you no longer use audit as a generic term, I am thrilled and I am excited. Do I need an audit? There are, I think, 5 areas or 5 times that the answer is absolutely yes. And they are, just to go back to the slide, when a state or federal government requires it, when you receive more than $750,000 of federal funding, which would be a government requiring it, when funders require it, when a financial institution requires it, or when a specific contract requires it. In the state of Ohio, the last slide. In the state of Ohio, our Attorney General does not have a audit requirement. In some states, California, if you receive $100, you have to go through a financial statement audit. So right now in our state of Ohio, we do not have that requirement, so that revenue is not driving any audit decisions necessarily. in the state of Ohio. So I think that's it. Danielle, I went through a lot, and I'm sure that we have some fun questions. So I will be happy to field those questions at this time.
Thank you very much, Donald. This is the time to put your questions in the Q&A box that you have for Donald. I have a few written down here and some kind of notes and some thoughts that I had across the way. But if you have questions, now's the time to put those in the Q&A box. We did have one in the chat, and I wanted to make sure that was covered. Did you see this, Donald? It said, can you kindly put the last slide back up? Okay.
Yeah, and I think I did that for them.
Okay, wonderful. Let's see. So one of my questions is, let's see, a nonprofit who's looking to have an audit done. We now know that there are that an audit is not a catch-all term for all things, and that you do have to break out what it is you want to have done. My first question is, when a nonprofit is seeking to have something like this done, knowing that they have a choice now, compilation, review, agreed upon procedures, etc., how would you say they should go about their search for a person that's a best fit for their organization?
That's a really good question, because all the audit firms can do every one of those services. Okay, so whether you're looking at one of the big five or whether you're looking at a one-person shop, everybody can provide that service. The way that you're going to find best fit is the same way that you would find best fit with any service provider, and that's in the relationship. How much are they going to be able to walk alongside you? How comfortable do you get with them? There's no magic to it, Danielle, unfortunately. And it's much like any other thing where if you ask me to do an audit of your financial statements and you ask a firm that has 200 staff people, or you ask a sole practitioner who has nobody else, our processes are all the same. Now everybody has a different price point, but our process is all the same. So you're really going to want to press into just relationships.
Okay, that's helpful. And as a bit of a follow-up question to that, you mentioned that if you're getting an 8K audit, that's a super good deal, and that I'm going to call it industry standard is somewhere around $12,000 to $15,000.
Yes.
Is that for the audit, and those other components are at different price points? For example, the
Yes.
compilation and review and agreed upon procedures, which might be better scaled for organization based on their size.
That's correct. So general rule of thumb, and a rule of thumb is a review is generally going to be half of an audit, and a compilation is going to be someplace around half to 70% of a review. So your numbers are going to go down. The agreed upon procedure from a cost standpoint really depends on the amount of work that you want done. We have done agreed upon procedures for as little as $600, where someone says, hey, Don, we're switching treasurers. We want you to look at the last 12 months of bank reconciliations that they've done to make sure they were right. Okay. We've also done agreed upon procedures for churches where it was $15,000 because of everything they wanted done. So that agreed upon procedure allows you to play with your budget and to do a risk versus risk versus reward analysis with your dollars.
Okay, so we're getting a few questions in the Q&A box. This first one says that, we know Ohio doesn't have a revenue number that triggers an audit requirement, but is there a point at which you as a CPA would be nervous if an organization did not have an audit? Or would a review / AUP always be sufficient? even for an org with, say, a $5 million revenue?
Yeah, so I'm going to make a distinction. I'm going to answer this. So let's say that you're a $5 million church. Well, you have one revenue stream, tithes and offerings. Yeah, I'm not overly excited about you having an audit, right? A agreed upon procedure review would be great. Let's say that you're a treatment facility that has 14 different systems and 14 different revenue streams that's generating that $5 million. Well, that's pretty complex. So yeah, I might want something more done for an audit. So that's why I love the fact that our Attorney General hasn't put just a blanket dollar threshold on it, because I think it matters the complexity of the organization. What is involved with complexity? Well, the more complex something is, the riskier it is. So I'm really focused on risk versus size.
Okay, so keeping in mind the complexity of your work and your revenue streams when making a decision on whether to get an audit or whether to get one of the other functions that we discussed.
Correct.
And next question is, when requesting an agreed upon procedure service, am I clear that you are asking for a firm to come and look at current practices and recommend changes? And I'll add to that, are these strictly financial practices, or what all other things play a role in this?
And that's a great question. So the way that an agreed upon procedure works is that we have a procedure. Review 45 cash disbursements. Then we have the results of the procedure. We reviewed 45 cash disbursements and found blah, 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 blah. And then recommendation, we would recommend you update your policy to be blah, 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 blah. So you truly get the consulting and the a third party assessment of your process, which is why I think it's underutilized. So I hopefully that answered the question.
Okay, if it didn't answer the question, go ahead and plop more information in there. But we just have a question confirming, are there 3 types of audits? Compilation, review, and agreed upon procedures.
So you have 3 types of audits, and the 3 types of audits are financial statements audits, governmental audits, and uniform guidance audits. Those are audits. The other services are less than an audit. A compilation, a review, and agreed upon procedure all are less than an audit, but can provide you as an organization or as a board what you need without incurring the expense of an audit.
Okay, so you have delineated types of audits and other services that sometimes people mean when they say audit, or may not be aware exists, that may serve them better than a full audit in this situation.
Correct.
Okay. And so we have another question that says, you mentioned key risk areas for nonprofits for payroll, cash management, and grant compliance. Would these be best areas to focus on for an AUP engagement? Are other things that come to mind as well? Are there other things that come to mind as well?
So they mentioned payroll, cash disbursements, and grant compliance, I think. So I think that, yes, those become really important ones. The other one that comes into play right now, and this is a very technical question, so somebody asked a very good question there, is revenue recognition. The way revenue can be recognized has changed, and I think that we need to become more and more focused on that. So especially when we have multiple contractual revenue streams. We need to make sure that we're recognizing revenue the proper way.
All right. And our last question in the Q&A box says, I am a brand new ED of a small nonprofit that has had extreme growth. Our nonprofit management consultant told us that we're required to do an audit due to the funds we've taken in this year. But we're wondering if that's the case. Should we plan to do a review? So I guess I'll summarize this question as, a small nonprofit has recently taken on more growth than they've expected to take on in 1 year. Does this sudden growth automatically mean audit, or is there a better match in the list that you've given us previously?
So this is where I would push, and now you have this knowledge, I would push back on that consultant a little bit. What do you mean by audit? And I'm going to assure you what they mean is, well, we need someone else to look around and look at what we're doing. Oh, okay. Well, then we can do a review or agreed upon procedure and get someone's opinion or report on our processes. So I think that now that you have this knowledge, you're going to push back, because what it sounds like is that they're using this word audit generically again. So yeah, the sudden growth, now I don't know what small is, I don't know what sudden growth is, but sudden growth, especially with so much federal dollars floating around, if let's say that you're a small nonprofit and you just got an influx of federal dollars, but it didn't go to 750,000, then yeah, I would probably say, yeah, let's have somebody come in and take a look at our processes surrounding this grant to make sure that that was good. So we might be looking at an agreed upon procedure in that case. We could look at a review, but again, a review is going to be focused on the numbers and not the grant management. Okay, so you have to really identify what you're wanting out of the process.
Okay, we got a question here in the chat. It says, can we conduct a review and agreed upon procedure as is? As I understood compilation and audit to require GAAP, is that correct?
So to receive a clean opinion in a compilation review or an audit, you have to follow GAAP. But that doesn't mean that clean opinions are always the goal. Okay. So if you're a cash-based organization and you want to report on a cash base for some reason, then you can still have a compilation review or an audit. I have a client that does their accounting on a grant basis of accounting, and they have an audit every year. And every year we just say these financial statements have been presented on a basis other than GAAP, and we keep moving. So moving to accrual base is preferable. And if you don't want to have to explain to third parties, well, what do they mean by you didn't follow GAAP? Then that would be good to do. But being on a cash basis does not preclude you from any of the services.
Okay. We have a question that's asking to review again the sort of price differences between compilations. So you gave us percentage, 50%-ish around that for a compilation, 75-ish% for a review. Agreed upon procedures can vary in cost. And so those percentages are percentage of a full audit. It's a guideline.
Right. So if you start with let's say that you start with $12,000 audit, and you call somebody and say, hey, and you know this firm does audits for $12,000. and you call somebody and say, hey, I want a review, I would be expecting them to quote you somewhere around 6,000. If you said, you know what, I want a compilation, I'd expect them to be quoting you someplace around 4,000.
Okay. And so our oh, sorry, did you have anything?
No. And then you were right. The agreed upon procedure all depends on how much work you want to do.
Okay. And then our final question is around non-financial AUPs. So an example would be if a daycare provider advertises that they only allow 10 kids per teacher, would an AUP report whether that's true or not?
Sure. You can do an agreed upon procedure around anything. Yeah, you can do an agreed upon procedure engagement around anything. And you will find that in most cases, agreed upon procedures are done not around financial data. They're done around processes, because that's where we have risk, and we want to make sure the risk is being covered. So by pulling the numbers out, or the financial data out, we're able to really address the risk that the board or whomever wants, or even whoever asked that question. And that's very interesting, to substantiate one of your marketing statements.
Mm-hmm.
Absolutely, you could do that.
So a question that I have, and you may have addressed this already, is when you have a full audit, you request a full audit from your accountant, does it include something like an AUP, or is that, if you wanted that piece, it would be in addition to the audit?
It would be in addition to.
Mm-hmm.
So this is where, let me say it this way. When you do an agreed upon procedures, you get to tell me what to do.
Okay.
When I do an audit, I get to do what I think I need to do to say that the financial statements are not materially misstated. So let's say that, take that daycare instance, right? I would never look at the student to teacher ratio in an audit. It's irrelevant to me. There's no risk in the financial statements to it. Let's say that you were a theater and you had a liquor license. I would never look at what the overall value of that liquor license on the market would be, because it's irrelevant to me, because your financial statements make the liquor license such a small part. You know, Danielle, from a funding source, isn't going to make a decision to fund you or not fund you based upon whether or not you have that liquor license, let's say. So we have to remember that in the audit, I'm trying to get to the point that I can say that the financial statements are not materially misstated. You, as the auditee, have very little say on what I do to get there. In agreed upon procedure, you have complete say in how we get to the point so that your board can say, hey, we know that XYZ was done right.
Okay, so I think we might have time for just one more question. And so I want to take a little bit of our time and talk about leadership transitions in an organization. And I have a question here, but I'm sort of still crystallizing, but it is around the utility of the services, that the non-audit part of the services that you taught us about today, either on their own or in conjunction with an audit, how that serves in a leadership transition.
I think it's invaluable. And Danielle, I think that's where one of those situations where I think that, you know, so many times we'll say, well, we're having a leadership transition, so we want an audit, right? And that's what we'll say. Well, if we really dig down deeper, what they're asking is, hey, are the records that we're handing off, or has the way things been done as this person leaves, are they leaving us with any dirty laundry that we're going to have to find out about later? So I think that agreed upon procedure, especially for smaller organizations, becomes critical in that handoff and in that change of leadership. Now, again, a financial statement audit, if what you're wanting to know is, hey, I'm an executive director, I'm outgoing, I say we've got X number of dollars in the bank, I say we have a healthy financial statement, and someone says, okay, well, I want to know whether or not that financial statement is accurate, then we want to have an audit, right? But if someone says, hey, the money that's in the bank is really in the bank, then a financial statement audit will give you that, but you could also get that with agreed upon procedure for a fraction of the cost.
Mhm. Okay, that's really helpful. And we have no more questions in Q&A. And so we will give the gift a time of 2 minutes exactly for everyone. Thank you so much for joining us today and for the last 7 months to provide all of the knowledge that you have. This has been a really fantastic series. It's our inaugural series. So I think that Donald knocked it out of the park for us on our first round. So standing ovation to you. Please.
Thank you.
Yeah, thank you so much. You put a lot of heart and a lot of your knowledge into this, and I think we've all benefited from it. Everybody on the line, please stay tuned for other forums. So just because this series is ending doesn't mean the nonprofit forum series is ending. So please stick around. Next month, we will be having a forum on volunteer management. So keep an eye out for that. And with that, have a wonderful day.
Danielle, thank you very much.
Thank you.
It's been great.